Hey traders, welcome back to the channel and welcome back to another weekend video. Trump said that he is expecting a response soon from Iran, but at the same time, Israel has moved to maximum alert after the latest exchange of fire. And they have also said that any return to the war must include strikes on Iran's entire energy infrastructure within 24 hours. If you don't know the background, US sent a proposal to Iran and they are waiting for the Iranian response. But at the same time, Israel is preparing for the resumption of war. They have moved to maximum alert. So, in simple words, the situation around the Middle East war, the war between Israel, Iran, and the USA, is still kind of uncertain. And we can clearly see the reflection of this uncertainty in the charts. We can see gold has been in a higher time frame, or you can say lower time frame. I would say a medium term type of consolidation. And when you see the oil chart, oil is also trapped in a range. There is no clear direction for the markets, and at the same time, along with this war, obviously our focus is on inflation, our focus is on the economic impacts. At the same time, we have the midterm elections this year as well. A lot has been happening in these markets. We have a lot to discuss, and we will discuss everything from a sentimental perspective. We will cover everything from a fundamental perspective, and we will plan our trades accordingly. So without any further ado, let's just start. Now in this market we have some uncertain things and we have some certain things. Now, like uncertain things, we don't know if a cemented deal will happen, or if we have or if we will have a resumption of war. Obviously you can argue on that, but that will still remain uncertain. You can give your reasoning, but you don't know for sure. You can't say for a certainty. And at the same time, Israel is preparing for a resumption of war. Iran is not ready to talk on the uranium enrichment, and they will never send back their enriched uranium to the USA. Okay, these are all the uncertainties, or these are all the points of deadlocks between Iran and USA. The main point is the uranium enrichment, and Iran is not ready to even talk about their nuclear program as of now. So, as long as these deadlocks remain, one thing is certain, that the Strait of Hormuz will still remain closed. Now, these are again, at some point, they still become kind of a uncertain things, right? But we have some certain things on which we can focus on, and we can take some benefit out of them. The certain thing is that we will never have a major escalation during the trading week. All we will have is optimism, and even if that optimism is fake, you will still see that the markets are buying that optimism. Like for example, if we go here on oil chart, last week we had some optimism. Even if that was fake, we had some optimism and we saw some continuous profit taking in the oil prices. We had some optimism and we saw some continued upside in the gold prices. We had some optimism, and we have been seeing some type of a fake optimism since the very start of this war. And you can see that the stock market, in response to that, has been continuously making back to back new all time highs, and the stock market is still hitting fresh new record highs, right? So the point is that when almost all the things are uncertain and the markets are conflicting, or the headlines are conflicting, or the fundamentals are conflicting, the best thing to do at that time would be to focus on the certain things, which is, we are never going to see any escalation during the trading week, and we will only see the optimism. Okay, the reasoning for that is very simple, because if America will escalate during the trading week, that will send the stock markets around the world in a panic selling mode. Okay, so America will never do a major escalation during the trading week, and Iran will never do a major escalation, because the very first reason is going to be they don't want to be the primary aggressor. Because if they do so, then they will lose the support from the average people of the world, right? That is why they will never launch a escalation first, and America won't launch a major escalation during the trading week, because simply it will send the stock markets around the world in a panic selling mode. So these are the certain things which we have, and what we can take out from these certain things, it means, these certain thing means that during the trading week you can expect upside in gold, you can expect continued upside in the stock market, and you can expect some profit taking or even a range bound market in the oil prices, right? Based on all of these certain things, or based on the fact which I just told you, right? Now we have a lot of other things for the next week as well, other than all of this war situation, and that is going to be the inflation data. Next week we are going to get our CPI data from the USA, and also the PPI data as well. Now, To be very honest, I am expecting CPI to come on forecast or near the forecast. I am not expecting it to become too much higher than the forecast, which will trigger some rate hike fears and stuff like that. But even if the CPI comes too much higher than forecast, that can obviously give you a kind of a, you can say, a deeper pullback in the gold prices. They can continue the downtrend in the gold prices. But after that, after the CPI data, after the PPI data, the market's focus will again shift back to the war situation. And during the trading week, if you see any news related to this war which serves as optimism, maybe about a deal, even if that's fake, then market's focus will again shift back from the CPI data, from the rate hike expectations, all the way back to the optimism from this war. And we will again see upside in gold, upside in the stock market, and downside in the oil prices, and even downside in the dollar prices as well. Because market's primary focus right now is the war. If the war ends today, if the strait opens, then obviously the supply fears will go away back, inflation fears will go away, will go back away, right? Rate hikes will get priced out, right? That is why even if you see a higher than expected CPI data or the PPI data, or if inflation comes elevated, obviously that would lead to downside in gold, that would lead to some controlled pullbacks in the stock market, that would lead to upside in the dollar. But if after that, during the trading week, you see some news related to this war which will serve as the optimism, then market focus will again shift back to that. Markets will again start running on that optimism. Markets will stop caring about that inflation fear, right? So right now, based on my expectations, I don't expect CPI data or the PPI data to come too much higher or lower than the forecast, right? I am expecting CPI and PPI to in line with the forecast, right? I'm not expecting any big changes. And if that actually happens, if my expectations are on point, then what will happen again in the markets? The market focus will again remain on the war. The markets will not care about the CPI data, about the PPI data, about the inflation, right? Talking about only the specific data point right now, not about the overall situation of the inflation. Obviously, they are caring about the overall situation of the inflation, but from this data point, they will not care about it enough, and they may even see as some type of a optimism, right? Why? Because inflation expectations will still remain within line of the investors forecast. They are not too much elevated about from the investors forecast. That's why we even the markets can even take that at optimism, right? So for next week, based on all of this, and also we have to understand the timing. We have the midterm elections this year, and whenever there is a midterm election, based on the seasonality on gold, can see clearly that gold goes into a kind of a consolidation or into kind of a range bound market from the start of the year till around July. Okay, and around July you start to see a breakout in gold prices, and the rally continues into the year end till the end of December. Now, why this happens? Obviously, during the election years or midterm election years, the political uncertainty it rises significantly, and investors they stop caring about anything else, and they simply care about that political uncertainty. And whenever there is an uncertainty, investors go and rush towards the safe haven, which is gold. That is why in even political years, in presidential election years or in midterm election years, you start to see continued upside in gold and even aggressive upside in gold starting from mid-year till the end of the year. And that can still very well be the story. Now, the seasonality based on the seasonality, if we see that right now, if we see the chart on gold on the daily time frame, if you are hearing any background noises, ignore that, because I am right now on a vacation, so obviously you will have to deal with that. Never mind. Right now, what we saw on gold since the start of the year, we saw a kind of a profit taking move in gold, and after that, since then we have been in a higher time frame consolidation. And we can very well, if this war remains, if we don't see a cemented deal, okay, and if all of this conflict remains with the strait still blocked, inflation expectations elevated and all that stuff, right, we can still see gold remaining in this range until mid or until late July, before it finally breaks out on that a rise of political uncertainty, or even very well make some new all-time highs, right? And at the same time, you can see some profit taking or some controlled correction, some controlled pullbacks in the stock market as well, because when if the uncertainty will rise, right, people will start booking their profits from their risky assets, and they will start investing those profits into safe haven assets like gold, right. And at the same time, when the political uncertainty will rise within the United States, you can see some continued downside or continued profit taking, or a continued, you can say, even higher time frame consolidation in the dollar index as well, because that uncertainty will itself come from the United States, right. So in such type of uncertainty, when United States is itself the causer of that uncertainty, it will not help the dollar as a safe haven asset. Right. So due to all of this, going into July and then going into the end of the year, we can see some type of profit taking, some type of pullback, some type of corrections in the stock market. And once that political uncertainty, midterm election uncertainty is behind us, once we have clear results, once we are certain, okay, these are the results, and everything is clear now, that uncertainty is behind us now, at that time you can see stock market ripping back to the upside. So obviously, if you see a correction like that, that would be a dip buying opportunity. And right now in gold is in a, I would say, is in a accumulation zone before that big breakout in mid July or by the end of July. But until then, how we can trade it? We can trade it in a very clear way. Okay, we know we have identified our range, and this is our range on gold, right? This is our higher time frame range on gold. And to be very honest, if you don't see any major escalations until the market open, right, then markets will can take it as some type of a optimism. And also during the trading week, as I discussed, if nothing happens, like everything is uncertain, so during the trading week, one thing is certain, that during the trading weeks you will not see any escalation but only optimism, right? So one way or the other, you will get your optimism during the trading week. So based on all of this data, based on all of this pattern which we have been seeing since the very first day of this war, going into the next week, we can very well expect gold to test these range highs around the 4840s, 4850s before continuing lower. Why it will continue lower? Obviously, if you don't have a cemented deal, if the strait are still blocked, if oil supply is still disrupted, then it will continue to raise the inflation expectations, and it will continue to put pressure on gold, as it will continue to rise the real yields. And if the real yields are rising, then it means the opportunity cost of holding gold is rising, and it will put pressure on gold prices, right? I hope this is clear. That is why, as we don't have a clear factor right now, gold can very well remain in this consolidation until mid or until end of July. Okay, so you can take some benefit from this consolidation. You can maybe buy going into the next week if no major escalation happens, obviously, on any type of pullbacks, if CPI comes elevated or any type of breakouts to the upside. And you can target these range highs around the 4840s before you look for potential sells. Okay, and again targeting the range lows or even midway of the range, right? This is the pattern, but obviously you will have to keep an eye on the data, you will have to keep an eye on the headlines. So if something changes, you can adapt accordingly, and for that you can use the mrkt terminal, because on it you will receive all the live headlines, all the breaking news with the market impact. Here you can see you will get the market impact of every headline as well, and by clicking on this brain icon here, you will get a AI generated analysis of that headline. Along with this, obviously you have a lot of other features, like you can see your assets on the intraday and on the higher time frame, whether they are bullish, whether they are bearish, with their pullback area, with their target level. And along with that, again, to adapt, you will see the factors which are supporting the current bias and which can flip the current bias. And this is the section which will help you to remain adaptive. And at the same time, obviously you have a lot of other stuff. You have overall shape of the economy of the United States or Europe or whatever you want. You have the inflation, you have the interest rates, you have the employment, you have the growth, you have each and everything. You have a economic calendar as well, which I showed you earlier, and in it you can see the forecast from the banks as well related to different economics data, and you can get a playbook of everything as well. Right, so there is a lot of data, there is a lot of stuff. If you want to try it out, I will drop its link in the description and you can check it out from there. Now coming back to our main topic about oil. Okay, we have talked about gold. I have told you the playbook for gold. And now moving on to oil. What can oil do? Now, obviously, if you don't see a major escalation, if you don't see a new form of major escalation, I would say, but at the same time you also don't have a cemented deal, no cemented deal and no major escalation, then that will keep oil prices within this higher time frame range. Okay, if you don't have a major escalation, then obviously you can't see oil prices hitting $150 per barrel level or even $200 per barrel level. You cannot get that. And at the same time, if you don't have a cemented deal, then oil prices won't break below $75 per barrel level. Okay, they will remain in this higher time frame range because of again the conflict, the conflicting fundamental factors, right? So for oil, your strategy can be very simple. Okay, obviously during the trading week we are expecting to see optimism. We have been continuously seeing optimism during the trading week, so you can expect oil prices to continue trading lower with pullbacks going into the next week. But any test of the lows of the higher time frame range around the $84 per barrel level, or even lower around the $76 per barrel level, they will be your dip buying opportunities, because these will be the lows of the higher time frame range. And once you get to this higher time frame range, oil won't be able to break lower. Why? Because at that time you won't have a cemented deal. The markets will realize that, and you can take it for your benefit. You can take this higher time frame range for your benefit, or you can take these conflicting fundamental factors for your benefit, and you can buy oil at the lows of this range. Okay, and target maybe even the midway of this range, maybe around here, or maybe even the peak of this range as well. Okay, it depends on you or your style, right? So this is pretty much it about oil. After that we have the stock market. Now stock market, to be very honest, stock market is not a reflection, or I would say is not a clear reflection of your economy, right? It is more of a reflection of the earnings of companies. If the companies are growing, if the earnings are growing, if the profit expectations are growing or not, and if they are solid, then the stock market will continue to rip higher. And that's what has been happening in the since the past few days. Okay, the earnings of the major companies have been very solid. Okay, that is why you can look for continued upside in the stock market even with no cemented deal, and also at the same time you will obviously need no major escalation as well. Okay, the stock market in this environment, it can continue ripping higher until that midterm election uncertainty comes into the picture or comes into the play. So if this week CPI data comes a bit elevated than the investors forecast, then you can expect some sort of a pullback, but you don't expect a 7-8% crash or even 5% crash. Okay, that would be a very controlled pullback, and that pullback will be taken as a dip buying opportunity, right? Or even if you see a short term type of escalation, a very routine type of escalation, even that can trigger a quick pullback, but that would again be taken as a dip buying opportunity. And also, as we just discussed in the start of this video, we are only expecting optimism during the trading week. So that optimism, even if that's fake, that can help stock market bulls as well going into the week. Okay, so if nothing changes, if you don't have a cemented deal, and at the same time if you don't have a major escalation, a new form of major escalation, if nothing of these happens, then you can still very well see continued upside in the stock market. And if a cemented deal happens, then obviously you can see aggressive upside in the stock market. Okay, all you have to focus on is a major escalation. If no major escalation happens, then the stock market won't care about the other situation, about the other things. Okay, they will continue to rip higher, the indexes will continue to rip higher, and you can look for pullbacks into even $7,300 demand area, into even 7280 7260 something like demand area, or even flat $7,200 demand area. All of these can serve as beautiful intraday buying opportunities. Obviously I am not calling for a swing trading opportunity just yet. I will wait for a deeper pullback for that, and I don't know what will be the factor of it, but if that comes, then I will wait for a deeper pullback, maybe all the way back into these previous all-time highs. And obviously if I get that, then I would take that as a swing buying opportunity until something does not drastically changes in the macro picture, right? So this was pretty much it about oil, about the dollar, and sorry, about the gold and about the stock market. These are my biases, and I have told you the reasoning as well. If you have any questions, you can ask in the comment section. And if you want to join our public Telegram group for trade ideas, macro updates, and all of that stuff, I will drop its link in the description as well. And if you want to check our results, our verified PNL statements, then in that same public Telegram group, inside that, in the pinned messages, you will find all of our previous past PNL statements. They are in the pinned messages. This was pretty much it. Make sure you hit the like button and the subscribe button as well, as it simply helps us with the algorithm. Best of luck for the upcoming trading week.